My FM. That be all and oats there. IB Morning Dave here. We're at 66 degrees now. Sunshine in the hood. And we even have some sunshine on this side of the fence here.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And speaking of sunshine, it's time to check in on your money and see what's going on Wall Street. And a ray of sunshine this morning. Philip Statler is on the phone with us from Statler Financial Services in downtown Sebring. Philip, good morning and happy Monday. You must be on duty this morning because the Seminoles won on Saturday.
Well, I am excited about that, but my normal meeting kind of got moved around today. So I thought, well, hey, I'll join you today because I haven't told you, but I got to miss tomorrow morning. So I thought, well, I don't want to miss 2 days in a row. So I wanted to be right here with you. So
there's always a big gray cloud outside the golden lining, isn't it? Hey, we ended up with a halfway decent week last week and actually a decent month. At the end of the day on Friday, our last trading day of October, we marked 7 straight winning months for the NASDAQ, 6 straight winning months for the Dow and the Standard & Poor's. And, you know, as poopy as the week was after the interest rate decision and the kissing your sister attitude the markets had to the press conference Powell held, I was almost surprised to hear good news, didn't you?
Yeah, I was, but it was really the NASDAQ, I'm going to say, really set the world on fire last month. In the month of October, these are kind of approximate numbers. I don't know the exact gains, but they're up about 4.8%. The Russell was up about 0.5%. The Dow Jones up about 2.6%, and the S&P 500 up 2.4%. So not bad for the month of October.
Absolutely. It becomes kind of a cautionary tale for folks who change their mood with the winds. I mean, yeah, it was a crummy week for at least 3 days out of the week after the Fed decision, but, you know, on balance, the month did perfectly fine. And in October, since that's normally kind of a bloodbath month for the major indexes, I'd call a positive month even better, wouldn't you?
I would, absolutely, Dave. You know, that's because October can really be a sad month.
It really can. Just to quantify it, on Friday, the things were green, not monstrously green except for the NASDAQ, but the Dow was up for, almost 41. S&P was up by about 18. NASDAQ was up by 144 points. So we ended up October with a little bit of a bang anyway. And that brings us into November, and the government still shut down during unemployment figure week, and everybody's going to be whining about how we don't have government data to play with, but we do have some stuff we're going to be talking about in addition to a slew of major corporate reports. Tomorrow, we're going to get the JOLTS report, which is the number of job openings expected, mortgage information on Wednesday. That ADP private sector employment report is going to be real important on Wednesday because that'll be the closest thing we have to a current employment picture. And then on Thursday, we get job cuts. So, even absent the government, we're going to have some data to talk about and some indications as to which way the economy is going, aren't we?
We are. We're going to have some indications, and any little bit will help because I can't imagine when we get the final, updated numbers from the government on all the things we've been missing, what that's going to look like. And if it's less than spectacular, then that could put some pressure on the markets.
Yeah, and all of that stuff that Powell was saying about don't count on the December rate cut. If the job figures when we finally get them stink, I think the odds for that Chicago Mercantile Exchange odds-making service probably going to go up considerably from what they were midweek last week, wouldn't you think?
I would think so, Dave, because let's face it, you and I, we've talked a lot the last week or two about job cuts. Amazon cutting jobs, all these other tech companies cutting jobs because of AI. And so, when we finally get hopefully the real number, that should, I'm thinking that's going to show not good news.
Absolutely, and it's interesting so far. The monthly job cut figures that we get. I mean, it shows the employment market is slowing down a little bit. But with Amazon, UPS, and the other companies all cutting jobs, at some point in time, these AI replacements have got to start showing up in the national figures with some more clear indication of the employment market slowing down. But we really haven't seen it yet, and that I'm frankly finding kind of confusing, aren't you?
I am, and I think a lot of it may be because, well, it's not showing up in earnings, right? And that's what's driving the market right now is earnings. And so until we start to see that, which I mean that it could happen in the fourth quarter, that would make some sense, right? If we cut in jobs, it may not show up until the first quarter of 2026 because if they're cutting jobs now, at what point do they fulfill the whole gamut that they're gonna cut? Well, it may be a couple quarters before we see that effect.
That's true. The other thing that I've mentioned before, when we see these big job cuts, and a lot of them have been coming in high tech, remember California has it's either 60 or 90-day notice requirement. If you get fired in California, you've got at least 60 days to find another job before you do, and there's still enough activity going on where a lot of these layoffs in the high tech business going to make a difference in terms of California, and half the time they find a job before they actually show up as unemployed. When we start seeing UPS and Amazon, where they got facilities all over the country, we might actually get something measurable off of these layoffs.
It could very well be. That's one of those things. We just wait and see.
Absolutely. Whole boatload of household names from the standpoint of stock market investors coming up this week. If you thought all the big ones were done last week because they were all household names, names like AMD, the big chip maker, Palantir going to report today, Supermicro, which isn't a household name, but they're really big, and a bunch of energy firms also going to report. It's Monday, so we're dealing a bit on tidbits, and you've got a few information pieces out there to kick our week off, don't you?
Dude, the big tidbit today is the holding company of Kenvue. Kenvue is the maker of Tylenol, and J&J spun them off a couple years ago, and so now Kimberly Clark is going to purchase them for $48.7 billion in cash and stock deal. Won't close until the second half of 2026. But let me tell you, not everybody's happy about that. Stock market, the stockholders of Kenvue, they're very happy. Up 18% this morning.
What does the Kimberly Clark stockholders say?
Yeah, they're not happy at all. That's trading down almost 15% this morning.
Wow. My initial reaction when you told me that before we went on the air was, wait a minute, Kimberly Clark is a great big paper maker and consumer goods company. Pharmaceuticals is a completely foreign field to them. I can't wait to read the press release as to why they think there's any symbiosis with their ongoing business on that one.
Yeah, I'm not sure, but they have Band-Aids too, but yeah, I'm not sure what made them decide that that was a good idea.
I flippantly said if you were going to be Kimberly Clark, the biggest toilet paper manufacturer in the country, I would think you'd want to buy kaopectate, but I'm not in the boardroom, so I'll let it sit.
Another tidbit, Berkshire Hathaway.
Yeah.
They earnings jumped 34% year over year, but their stock still hasn't done well. It's only up 5% this year. But they have accumulated the most cash they've ever had.
Ooh.
$381 billion they're sitting on right now in cash, and no intent to buy back any of their company stock.
That doesn't sound like a strategy they've generally had anyway, but if they find a company worth buying, heaven knows they can do it for cash now, can't they?
Oh, absolutely. And to throw a little bit more on there, they actually liquidating their portfolio. They had like $10 billion in gains this last quarter in stock sales.
Wow. I'm trying to remember. It's either is the first of this month or the first is next month. Warren Buffett was supposed to be turning over the keys of the executive suite. Wasn't it as of today he's changed?
I saw that in the article. I'm trying to remember. At the end of End of the year. End of the year.
Okay. Okay, I've been seeing all the articles referencing Buffett, and I was getting the impression it was the 1st of November that he was turning over the keys to the executive washroom to his successor. It's going to be a couple more months before.
Yep, December 31st.
Okay, all right. Well, resetting the table this morning, got a positive day from Friday going on. We're starting a brand new week, brand new month with no government data, which is causing just about everybody to change underwear in Washington 45 minutes before we open. How are they doing on Wall Street?
Now we got a tinge of green in the Dow. It's up 5/100ths right now, about $25. S&P 500 is up a little over 1/3%, $25. NASDAQ 100 is up about 0.7. That's $181. Russell 2000 is trading in the red just slightly. On the other side, we've got silver up 0.3% to $48.31. Gold up 0.8 at $4,028. Crude oil is down almost 0.1%, $60.93, which I think is higher than what it was Friday morning.
I think it was as well. It's under 61, so I can deal with it. Looking at the overseas markets, they're happy on the Asian rim this morning after President Trump and President Xi shook hands and got rid of some of the tariff hassles. Everything in the Asian rim was up markedly, even Japan up over 2% at the close this morning. Europe's a little bit more of a mixed bag, but there's still a green tinge to it. The average European index is up by, call it a little over 0.25% halfway through the European trading day. Everything is coming up roses so far this morning. How do I get a hold of you, Philip, to make hay out of this and help my retirement plan stay fixed on track?
Devin, give us a call, 863-382-0037, to schedule a call to make sure that they're on the right path to the retirement they dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And back here again later on this week with you and me tomorrow morning to catch you up as to what's going on in the markets. You have a good day, my friend. We'll catch you Wednesday, all right?
All right, take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Good to see you on a Monday. Take care. Talk to you Wednesday. Bye now.